Hey everyone, me Kevin here. So earlier we talked about how weird it was that the treasury yields went down after we had a higher than expected jobs report, 850,000 jobs versus 711,000 expected. And now this morning we posted a video talking about our thoughts regarding what's happening here. And some of the big bottom lines, which I think it's important to watch that video to see some of the details. But one of the things I talked about was I think the bond market is pricing in lower inflation more than they're pricing in the risk of a taper, which would mean less Fed buying bonds, which would mean rates should go up. But because rates are going down, the market's actually pricing in more deflation. And we talked about some stats related to the unemployment report showing us that. So watch that video. If you want more details on this, definitely watch that video. But Cathie Wood just came out and also made a video talking about how it's weird what's happening in the bond market. In fact, her video has bonds in the title, which is a really boring word, but she's hitting the nail on the head. It is very weird. It's raising a big eyebrow in terms of a shift in the market. I had the same exact suspicion, and that's why I went deep and made that video this morning. Cathie Wood starts off by saying, guess what? We think the bond market might be sniffing out deflation. That is the bond market starting to price in deflation. This is literally what we talked about this morning. And I'm not trying to pat myself on the back going, Cathie watches my videos. I think people who are really looking at these numbers are going, yeah, that's what's happening. We're hitting a turning point here. And I know like 50% of you don't believe that we're going to see deflation. It's no, we're going to hyperinflation. Listen to some of the things here because Cathie's added some really cool stats, okay? First, and I'm going to go through some of the things she said and add commentary. First, she mentioned, well, this is the sharpest and shortest recession we've had since World War II. And it's probably because of, well, I mean, it's COVID. We panicked, shut everything down. We hit rock bottom and reopened very quickly. She also believes that the risks for taxes going up, capital gains, corporate taxes going up, are lower, even though we're closer to a stimulus package happening than we have had before or have been before. Now, here's a big one. So the rate of money growth, how much money printing we're doing, last year, we had a 26%. That's a lot of money printing. So far this year, we're at, and you don't want to like go half, or this is a rate. Okay, so half. It's not like this number is going to be doubled because we're only halfway through the year. So far, the rate of money growth is 13.8%. which the rate is half as much as it was. Now, it's still twice normal, but basically, we had a ton of money printing, and now we're seeing that decline of money printing happening, and the bond market might be starting to price this in. Now, what's fascinating is she goes on to, she talks a little bit about oil. We don't talk too much about oil on the channel. I'll just throw in some quick mentions here. But she mentions that because oil prices are so high right now, and she mentions like, oh, we thought oil would crash much sooner than this, and it's just not crashing. We were wrong on this. She goes on to say, hey, but you know what the good thing about that is? The good news is if OPEC's trying to keep oil high right now, they're actually going to be shooting themselves in the foot because they're going to encourage more EV purchases, more electric vehicle sales, and they're going to destroy their own oil demand, basically, demand destruction, she called it. And now she was getting ready to say how much she thinks a cost of, or a barrel of oil is going down to. I thought, okay, we're at 77 now, what, 40, 50 bucks is what I was thinking? She said no. $12 a barrel is what she's expecting. Super, super bearish. Now, she also mentions this morning, she didn't mention my part, so I guess maybe she didn't watch my video, darn. But my part had to do with the rate of wages going up, slowing down, so less inflation, right? Watch that the detailed video this morning on this. It'll explain this so well. She picked up on, which I mentioned this morning on the live stream, I'm like, oh, interesting, construction is down. She took this further. Beyond mentioning it, she's like, wait a minute, construction down, small business employment down, overtime down, average work week down, slightly. Some of these numbers down pretty slightly, 0.3% for overtime, average work week, construction jobs, small business jobs, things like this. This is a sign that maybe we're getting a little bit less of these pressures at small businesses, especially businesses needing to sell products and manufacturing, that maybe we basically bought all the stuff that we're going to buy during COVID. We bought our new shoes, our new shirts, our new laptops, our new, TVs and our home computers and all this, and we got all the goods. Now it's time to maybe start spending on services. Now, she didn't mention this, specifically and go into companies, but this is something that we saw with Apple, and this is something I talked to course members about this morning. I said, I'm really worried about Q1 2022 for Apple, because I think people have already bought their iPads and their iPhones and their computers. It's like, I don't need a new computer every single year. So I think next year's comps for product companies are going to be bad, and we've been talking about this even in the live streams. And so the fact that she's mentioning the shift to product, or the shift to product consumption that we've had, that has grown from our economy being 31% products to 41% products, is going to slow down. And that is going to hurt businesses that sell a lot of goods. And that consumption, she says, may disappoint. Now, she did say the market overall is very strong. I mean, the fact that we went through the Archegos 20x leverage disaster, where essentially they were way over leveraged, up to 20x leverage at one point, and their firm basically went bankrupt. That didn't create more collateral effects and damage the market is a really good sign that we stood the test of something that could have been as bad as like a 2008 or 2009 or something that could have spawned something that bad. So this is very, very good. But she mentions, look, valuations have corrected. Tech's come down. We've seen a lot of stock valuations come down over the last 3 or 4 months. They've recently been rebounding. But this is actually a good thing because it gives you an opportunity to invest at a lower price, and it gives you a higher rate of return going forward. This is why we've been buying like crazy over the last 4 months. And I know that Cathie Wood has as well. Both transparent about that, which is awesome. Now, I know I keep comparing myself to Cathie Wood. I'm not trying to say I'm equal, whatever. She's got a wonderful fund. She's got billions of dollars under management, and I'm very supportive. I think different thoughts in terms of some of the investments they make, but that's okay. That's what makes the world cool. So, what else does she say? She believes that right now the bond market is seeing a deflation. Oh, she reiterates the talk about bond market seeing deflation. We already talked about that. She talked about Tesla sales being up, being a really good thing. I think she kind of misunderstood a little bit of what's going on the Tesla website. She was really excited about the Tesla website having a semi-truck on the press release. And she's like, this press release has nothing to do with a semi-truck. Why is there a picture of a semi-truck on it? And, and I'm like, oh, that's interesting. So I went to the website. I think somebody, like one of her staff, printed out the press release for Tesla for her, and it had the picture of the Tesla semi-truck on top. She's like, this is Tesla going, our semi's coming, don't worry. Now, I think she's right about that message, but they changed the banner on the investor relations page on every single press release. So every press release that you would go in and print now has a Tesla semi. So I think that was just like, here's the press release, Cassie. Oh, there's a semi-truck on the top. I think that was more web design than messaging, but hey, you know what? I agree with Cathie in spirit on that one. Now, oh, this was big. Okay, I talked about this on the channel last week, and I also talked about this with staff at BlockFi, which, remember, you can always get $250 for free if you go to metkevin.com/BF. And I mentioned to staff at BlockFi, I go, you realize this latest crypto pullback that we've had, and we've talked about this on the channel as well, a 50% pullback has been a wonderful, I think we even talked about this on Millennial Money, has been a phenomenal test to the ecosystem. We just sold off 50%. Here we are, we're worried about debt in the crypto ecosystem, but we just sold off 50%. That's freaking amazing that we're totally fine after a 50% sell-off, right? So we get this 50% sell-off in crypto. We're still fine. Cathie picks up on the same thing. She says it a little differently. She goes, look, our ecosystem got cut in half, and we ordinarily would have massive counterparty risk, which is basically if somebody else has lent something else, swap contracts, derivative contracts, blah, 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 and nothing happened. Like, crypto did not skip a beat, was what she said. I've pointed exactly this out too. Like, this is a really good test. This is why I'm buying. Now, in fairness, Bitcoin, the average Bitcoin buy-in price has been somewhere around 35,000 over the last 6 months. So that means we never really fell that low, right? If we went down to 19,000 and we're like almost half of the average buy-in price, I'd be a little bit more nervous about liquidations and defaults. But still, we went from a high of 64 to, 29 there for a day. That's a really good test in my opinion. So this piece by Cathie over at ARK, honestly, it is so, like, this is what you should be doing when you're watching YouTube videos, because it is so awesome to go come up with your own opinions about something, then listen to other people's opinions about it, whether that's Cathie, whether that's me or other people you listen to, and then compare your thoughts and ideas and go, ah, yeah, Yeah, okay, I agree with that. Oh, I see that a little differently now. So I am very glad I'm in alignment with Cathie here on almost everything she mentioned. This is very exciting, and a lot of the things are things we've been talking about over the last couple of weeks, 2 to 3 weeks, as we've been seeing this sort of weird shift in the market. So very interesting to me. Let's see how things go moving forward. Folks, if you want to get up to $250 with BlockFi, use that link down below. Go to metkevin.com/BF, and we'll see you in the next video. Bye.